Hello there, this is the Bookkeeping Master on YouTube. Welcome back. Part 7. Stock. We love stock. Look at all that stock. It is fantastic. For some reason, if an accountant forgets to do something, it generally is the stock adjustments. Stock is so wonderful, but for some reason people forget to account for it. So stock has to be accounted for, especially when doing year-end accounts. The stock figure, the closing stock figure, will need to show on the balance sheet as a current asset. And it shows at cost price, not at sale price, retail price, at cost price. Whatever it cost the business, the entity, it will need to show at that price on the balance sheet. For a much larger business, you may have to account for stock in separate categories: raw materials, WIP, which is work in progress, and finished goods. So this video, I will teach you all about stock adjustments and how to calculate stock and show that closing stock figure on the balance sheet as already mentioned. So the stock calculation itself, it has 4 lines: opening stock, purchases or additions, stock used or stock sold, so stock disposed of, and then a closing stock figure. So when you do your stock calculation, you're going to have this on your Excel file or wherever you're making your calculations. You're going to have an opening stock figure, a purchases or additions figure, a stock used or sold figure, and then a closing stock figure. And it's that closing stock figure which is going to show on the balance sheet. So how do we do this stock calculation? Well, I'll go through it very briefly in this video. So the opening stock figure, if we go right to the top here, the opening stock figure is brought forward from the previous period. Another way of expressing that is the opening stock figure is the closing stock figure of the previous period. Nice and easy. So if you have access to the financials for the previous period, you'll be able to see the closing stock figure, which is going to be your opening stock figure. Simple. If there is no previous period, because it's a new business, a new company, then it's likely there was 0 stock because the company wasn't trading. So your opening stock figure is going to be 0. The additions or purchases figure, this is the purchases from suppliers. So as long as all the bookkeeping's done, as long as the accounts are up to date, you should be able to find the additions figure in the accounts. It's all those purchases made in the financial period. So if we're doing a year end, within the financial year of stock. So all those invoices from suppliers whom we purchase our stock from, they should be on the system. They should have been allocated to a specific nominal, maybe even a purchases nominal code. It might be called purchases, a cost of sale nominal code, or some sort of stock nominal code, nominal account. That figure is going to be the additions figure. So I said nominal code because I'm used to using Sage, but it could be a nominal account. It's going to be a nominal account. Stock used or sold, disposed of. I'm going to show you how to calculate this because this is not the easiest one to get. This requires some calculation. So the opening stock is the closing stock from the previous period. It's brought forward. The additions is simply just all the purchases from suppliers in the financial period. If we're doing a year end in the financial year, the stock used, sold, disposed of, I'll show you how to calculate that in a moment. And then the closing stock is actually going to come from a stock take. So the client or the business you're working for, or if it's your business, will need to do a stock take at year end or period end. And in that stock take, they're going to value all the stock that the business owns and give that figure to you. So you'll have the opening stock, the additions, and the closing stock. And the calculation is this below. The opening stock plus additions minus stock used equals closing stock. Now that's the stock calculation, and it's kind of an odd calculation because we're likely to have the opening stock, the additions, and the closing stock. So we've actually got the equals amount. We're missing this minus used. That's the figure that most people are often missing when they're doing year-end accounts. Any questions about that, please let me know. If you are doing the accounts for a client, it's worth asking them as a year-end is approaching to do a stock take. So it's actually done. You might need to remind them. Okay, so how do we calculate this used figure? Well, cast your mind back to your maths lessons at school, at college, where we mess around, we move things around in calculations and formula. So we have opening stock. This is the same calculation as before. Opening stock plus additions minus used equals closing stock. So we can actually change this calculation. If we were to plus used on this side and add it to the equal side, that would give us opening stock plus additions equals closing stock plus used. If we were then to minus closing stock, that would give us this calculation down here. Opening stock plus additions minus closing stock equals used. And these are the three figures you should have: the opening stock, the additions, and the closing stock. So you've got those three, you can calculate the used stock amount by opening stock plus additions minus closing stock. So to demonstrate this, let's have a look at the calculation to the left. We have opening 5,000, purchase of 10,000, that would give us 15,000, minus the stock used of 12,000, gives us a closing stock figure of 3,000. Now if we were to move that calculation around so it matches the bottom calculation here to calculate stock used, we would have opening plus purchases, so that's the same as before, that gives us 15,000. If we minus our closing stock of 3,000, that gives us 12,000. So these two are actually swapped around. This is the closing stock, this is the stock used. Have a go yourself, write it down, practice on some paper in front of you. It will make sense if you try it yourself. So once we have our four figures, so our opening, our purchases, our used, our closing, we have to post those amounts to the accounts. And there's actually only two of the figures we need to post the accounts. That's the stock used or sold, and also the closing stock figures. The stock used or sold will go to cost of sales on the profit and loss statement. The closing stock will go to the balance sheet as a current asset. Now I've gone through this quite quickly and I don't have any other material on my website about stock. The reason being, most of you won't have any stock to account for. Most businesses don't actually have stock. Small businesses usually provide some sort of service, so they don't have stock. And then those that do have stock, those that are selling products, those that are creating products, because it's a small business, it's generally very simple and straightforward. Stock adjustments become a lot more complex the bigger the business, and I guess that's true of every aspect of accounting. But as an example, doing a stock take for a business of this size is going to be a lot more challenging than doing a stock take for a business that operates from a garage at home. There is software out there that can help you. Even accounting software generally has some sort of stock feature that you can use to account for stock. Any questions? Let me know below and I'll speak to you in the next video.